All right, let's do a Lending Club account update for the spring of 2023. Hi, I'm John McNeil, and this is the Invest Strong Network. Welcome. So as all of my regular viewers know, I had since the late summer, early fall of 2018, I had been investing in these Lending Club peer-to-peer loan notes. And the notes I would acquire at the minimum of $25 a piece. That is that was the minimal amount that you could buy these loan notes for. And during this period from the late summer, early fall of 2018 until December of 2020, which is when Lending Club stopped issuing any new notes and doing the peer-to-peer loans, I had acquired a grand total of some 342 notes. Now, of these notes, Lending Club would have a credit quality grade going from A1, which was the premium quality, down to at one point as low as like G5, which was the junkiest of the junk, right? But I would try to stay on the upper third of the credit quality spectrum. So almost all of my notes were A level, B level, or C level notes with just a very small smattering of D level notes, right? All right. Now, since Lending Club has basically just stopped, they've gotten out of the peer-to-peer lending business, no longer issue notes. However, the notes that they had issued up until December 31st of 2020, those legacy notes are still out there, right? And in fact, I had been holding quite a number of them. And so I would continue to give reviews and updates on the Lending Club notes that I'm holding until such time as the last one either pays off in its completion, in its entirety, or defaults, and then the entire project is over, right? Now, the Lending Club system or the wind down has really picked up steam over the last few months. And in fact, this particular update is really coming at the tail end of this whole project, right? And so let me give you an update of where we stand right now. All right. So as I mentioned, I had acquired over the life of this project some 342 notes, of which as of today, and we're talking the 19th of March of 2023, some 297 of the 342 notes have completely paid off with interest. Okay, so that's great. Now, I am still holding some 18 notes in the portfolio, right? 18 only. And of these 18 notes, they have a combined value of some $101.82. So obviously, we're at the very, very tail end of the wind down, right? Now, as of today, I have 0 notes in the grace period. Now, the grace period is the first 2 weeks after a note is due. It is technically not considered delinquent, but it is the first step in the delinquency process. And so you never want to see anything in the grace period. And in fact, I have none. Yay! Now, in the 16 to 30 day delinquency period, I also have 0 notes as of today. Touchdown. We'll take that. And in the 31 to 120 day delinquency period, I again have 0 notes in that category, right? Now, that leaves me with a grand total of 26 notes that had fallen delinquent and had to be charged off during the life of this project. 26 notes in its entirety, with 3 of them being A-level notes, 9 being B-level notes, 13 being C-level notes, and I had a single D-level note charge off, right? All right. I also had one note, an A-level note, that is placed in the canceled category, which for the purpose of this review is the equivalent of a charge off, because they took my 25 bucks. Something happened with the loan didn't go through, but I never got my 25 bucks back. So I basically would kind of put that in the charge off category, although technically it is considered canceled. All right. Now, the year over year total return for my Lending Club notes from the late summer, fall of 2018 until the present is a very impressive 12.75%. Let me tell you, friends, I miss Lending Club, right? I miss it. I had a great deal of success doing it. Even in this very late period, the notes are still paying off. And I'm just very sad to see Lending Club go. And I've mentioned that in previous videos, but I'll restate it. I just felt that it was a very interesting, very fun way to invest and earn income. And I just hate to see it go, right? All right. Now, something very strange and unexpected has happened recently that I need to make my viewers aware of. So Signature Bank and also Silicon Valley Bank, two banks that Silicon Valley Bank in particular, which was a San Francisco Bay Area bank that catered to the high-tech industry, obviously had to be taken over by the FDIC recently. And that motion has sparked a near panic amongst other financial institutions that are either geographically settled there in the San Francisco Bay Area or are involved in the technology arena. Now, Lending Club, which had gone from a peer-to-peer lending platform into a more online high-tech bank, fits right square in the middle of both of those danger areas, right? And there is quite a bit of hand-wringing that is going on amongst the equity owners of Lending Club to see if possibly Lending Club may be the next major victim of a banking collapse. Because in this switch over that they had made in the early 2020s, their depositors are FDIC insured now, right? But then you have those who do not have FDIC insurance because their accounts are larger than $250,000, right? And that's what brought down Silicon Valley Bank and caused this crisis to begin with. So rumor has it that there's been a run on Lending Club deposits, right? Depositors rushing in, taking out their money, and that's caused the stock value, the equity value of Lending Club to collapse. Now, does this worry Brother John? Well, not really. Since I'm at the end of my Lending Club, very close to the end of my Lending Club project, even if Lending Club fell into receivership, bankruptcy, had to be taken over by the FDIC or some other structure, I wouldn't be affected hardly at all. However, there may be others out there that in fact do still own a large number of Lending Club notes, right? And whether they can be paid back for their investment in these Lending Club notes is really an open question at this point, right? So Lending Club is hanging in there for now, but if in fact Lending Club, the bank, goes under, I don't know what the value of the legacy notes are. They may be zero. I don't know, right? And it's not that big of a deal for me, but for others, it very well may be. And of course, for investors in Lending Club, one would have to say to themselves, or certainly I say to myself, well, gee, why didn't they just stick with the peer-to-peer lending arrangement, right? Because this switch over from the peer-to-peer lending platform to this online bank structure may be what brings down the entire company. And isn't that something, right? It seemed like a good idea at the time, but who could have imagined just a couple of years later it would lead to something like this, right? Always count your blessings for what you have. That's almost that is really the moral of the story. Anyway, all right, so that's my update on the Lending Club account as of the spring of 2023. If anything happens with Lending Club as a corporation, or if the notes become insolvent, I'll let you know, I promise, right? Also, please hit the thumbs up button for me, please. I would appreciate it. That helps increase the profile of my vids. Also, leave a comment. Let me know what you think the future of Lending Club is. I'd love to know. And of course, subscribe! You had better subscribe to Invest Strong. I'd really appreciate it. Thank you so much, friends, and good blessings.